Hello everyone, it's 8 a.m. Chicago time on the 20th of April 2018. It's Friday. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning it's a mixed bag. The S&P is up 2 points, almost unched. So is the Russell. The Euro Stoxx is up 6 points, almost unchanged as well. The US dollar is leading the pack, up 0.34%. The laggard today is crude, trading at 67.95, down 0.5%. Gold, Euro, FX, British pound, the yen. It's definitely a mix today. Looks like we're balancing. Looks like we balanced overnight in the S&P. The market put in a higher low versus yesterday's day session high and a lower high. And we're stuck here at 26.95 above the key 26.90. So that's where we stand. One of the things you want to keep an ear out for is the 2-year, 10-year yield. It is getting tight at 45 basis points. This is the flattest that the 2-year, 10-year spread has been since 2007. This is said to be a recession, kind of a perfect record recession indicator. Okay, I'm running a little hot. Recession indicator, and we'll see how that plays out. It's definitely something to keep an eye on. Remember, for those of you who are maybe about a month ago, I ran through the yield curve, played it back from 1990, and showed how it moves with the S&P. You might want to pull that up and take another look. Definitely interesting to watch. Let's get into what we expected yesterday. Is my mic still hot? Here's what we expected for yesterday. The primary scenario is for a test up into the low of the prior day, 2703.75, for an impulse down, and a push to 2690 is the target. That's what I drew on here. 2690 is the key target below. And again, open auction, push up into the prior day's low, impulse down, 2690 being the key target. Here's what happened. Here's our chart. Open auction, it seesawed down, up, went up to 2703.50, just a tick away from 2690, and then started to make its way down to 2690 right here, hitting the scenario 1 target. The market ended up pushing through to 2681.50, missing the 2680.50, 2680.50, which is the prior weekly high, acting as support just beneath that 2680 quarter, was the naked point of control from the Thursday, I believe, or I don't remember what day. And then we got news right here with Rosenstein and Trump pushed our markets straight up, and we ended up closing in the middle. We have a neutral day with a normal close. The point of control is inside of the IB. The market's in balance by most measures. We did stay below the prior day's low. I did talk about it being a high potential reversal day down, and we're very, very unlikely to push into the prior day's high. As I said yesterday, the prior day's range, as I said yesterday, the market is likely to advertise prices lower to find its buyers. It was getting very toppy. It was having a hard time pushing through those highs on Wednesday. So that's where we are in terms of what we did yesterday. The overnight session. The overnight session has been an exploration up and down and up and down. Pretty good rotations in the overnight session. Pretty good trade overall. But we are stuck in the middle here. The 2690 playing well again. 2690, 2690. We have a low volume node right here. Watching that 2690 closely today. We do have somewhat of a weak high. Multiple touches at the top. The volume overnight is okay at 154,000. Pretty good participation. We stayed inside of the prior day's range, and we are against the point of control, yesterday's point of control. So what the overnight session's saying is we tried higher, we tried lower, we tried higher, and now we're in the middle. So we have balance in the overnight session as well. Before I move on, I want to remind you, it is Like Friday. Please hit the like button today. If you don't see a like button on your screen, that's okay. Find the YouTube button at the bottom right of the video, and then when you go to that live stream on YouTube, hit the like button, please. So that's what we've got for the overnight session. That's basically our summation of the action. What do we have today? Today is expected to be fairly boring. I'm looking for an open auction in range, in value, against the point of control. Test lower 2690, expecting an impulse up, looking for a test into 2694, and then consolidation. I'm expecting the range to be fairly tight. I'm expecting 2700 to put a lid, not 2694, 2700. I'm expecting 2700 to put a lid on the buyers, and then for it to explore just back and forth. I expect a fairly balanced profile today. Forget this tail. This tail's not really there. I'm expecting it to just wind around most of today. I don't see anything major that is planned that's likely to push us out of our range. There's nothing on the calendar. The only thing remaining is the Eurozone consumer confidence at 10 a.m. Eastern. And Fed Speaker Evans at 9:40 Eastern. Other than that, there's really nothing. I don't see major earnings or anything like that. The big thing also today is options expiration. It is the third Friday of the month. So that's likely to contribute to the market being pinned down a little bit. It is not quad witching, but we have multiple expirations. So today is expected to be a pretty low volume, boring day. Now, I hope to God that it's wrong, that this assessment is wrong. And I would love to see us open up, find a base, test 2700, unable, turn down, impulse, and start working ourselves down the ladder of stock zones. That would be the secondary scenario. If we're not able to push up, we're likely to explore down and see if we can find some real buyers down below. We left a small gap, a one tick gap yesterday. We didn't close the gap zone up here. It is marked on your flex levels, but overall, not expecting magic today. So I'm going to be fairly quiet. If there's nothing to talk about, there's no sense talking. So in case you're in the Convergent chat service. So that's that. Again, it is Like Friday. Please hit the button before you leave. There's not much more I can give you except to say be picky today. Be picky, 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 picky. Find your spots. Don't trade. Don't diddle in the middle. And don't stake too much on any one trade. Don't make a wreck out of your trading account. Good luck.